Pembina Pipelines was once a staple in our portfolios. Today, we are going to find out if PPL, or well, PBA on the US exchange deserves to regain that position. Fasten your seatbelts, folks. This is going to be a good one. Pembina Pipelines used to be a monthly dividend stock, and that sure helped with their popularity as they had an average yield of just shy of 6%, which, before the explosion of covered call ETFs, was one of the better passive income options. Then, as the story goes, PPL changed from a monthly dividend payer to a quarterly, and with that, they lost a lot of their favor with the passive income vote. We do need to ask, did this change make them any less of an investment? Not really. Monthly dividends are not the norm in their sector, and if anything, they simply fell in line. Some were unhappy enough with that decision to sell their positions, but of course, there's always other people ready to scoop up those shares, so overall, that did not impact them too much. Of course, we are going to get into their fundamentals to figure out if they are worthy of our investing dollars. Their last quarterly report, that was dropped back in February, and it covered Q4 of 2023. They do have another report coming out in May for Q1 of 2024. Join today's conversation and let me know in the comments if you held on to your PPL stocks. Thank you for your participation. If you love this sort of content, be sure to hit that subscribe button for more, and another huge thank you for that click. In going over their latest report, there are some highlights that are worth noting. Firstly, in terms of earnings in 2023, they exceeded the high end of their original 2023 guidance. That's pretty good. In addition to that, they also entered agreements with Dow Chemical to supply and transport 50,000 barrels per day. They also approved a $140 million expansion of the Wapiti plan, which will increase its natural gas processing capacity by 150 million cubic feet per day. This is pretty exciting. Another project they are working on is the Peace Pipeline expansion, and they got some good news here in that the original budgeted $530 million expansion, it's looking to come in closer to, well, $430 million. That's not too shabby. This all looks great and sounds positive for the company. However, we of course do need to look at the numbers and see if they are telling the same story. Is Pembina Pipelines about to get a happy ending? Well, to find that out, we need to call on our favorite number connoisseur, the one and only Mr. Math. As usual, we will begin this riveting tale of the balance sheet with a little surface data. Their current value comes in at time of recording at $48.19. Their market cap, that comes in at $26.48 billion. Their beta comes in at 1.48, meaning they're, well, 1.48 times more volatile than the market average. That earnings per share, it comes in at 2.99, and they have a price to earnings ratio of 16.12. The average amongst their sector is 18.2. So this could be a sign that they are undervalued. When we look at a few of their peers, we do have, well, Gibson Energy has a PE ratio of 17.4, Enbridge is also, well, 17.4, and TC Energy comes in at 19.1. Looking at their price to book ratio, that comes in at 2.1, the average 2.7. Once again, also kind of mirroring the idea that they may be undervalued. Their return on equity comes in at 11.24%, and those return on assets, 4.11%. The surface data looks fine, and I have no complaints yet as this story is progressing exactly as expected. We do have some foreshadowing in these numbers that PPL may just be undervalued. To see if those hints pan out, we need to peel back another layer and take a look at their next chapter, or the cash flow data. They have a revenue of $10.39 billion. Their earnings come in at $2.07 billion. Those earnings are projected to grow by 8.22% per year, so that's not too bad. Their profit margin, nice looking, 18.1%. When it comes to free cash flow, they have $2.64 billion. Operating cash flow, that comes in at $3.23 billion. Let's see what their fair value is. So their current value, once again, $48.19. Using a discounted cash flow model, we get a fair value of, well, $79.49. This, of course, does verify that they are undervalued by 39.4%. We, of course, well, we had suspected that from those price to earnings and price to book ratios. Now, if we look at their 1 year projection, that does come in at $52.03. That is an increase of 8%. If they live up to that 8% share growth with their dividends, we could see some nice total returns in 2024. So far, things are looking really good for Pembina. Let's jump into the next chapter, though, and take a peek at their returns data. Looking at their yield, that comes in at 5.541%. The dividend is quarterly basically 66.7 cents per share. Their payout ratio, that comes in at 88.80%, so it is sustainable. And for the 5-year average dividend increase, that does actually come in at 3.40%. The elephant in the room with their dividends was, of course, that change from monthly to quarterly. But for the most part, we still have a consistent, sustainable payer. Looking at their 3-year, their price rose from $36.83 to $48.19. So that is a return on investment of 30.84%. Total return 51.34%. On the 1 year, their price rose from $45.27 to $48.19. So that's a return on investment of 6.45%. Factoring in the dividends, we get a total return of 12.34% this year. Year to date, their return on investment comes in at 5.73%. Add in the one dividend payment thus far, and we get a total return of 7.19%. These returns are in the green, which I'd like to see, though the last year has been a little lower than I had hoped for. I do suspect that this company will do better once we get some rate cuts on the table later in the year. The final chapter in Pembina's books is their debt situation, where we may just be unmasking the villain of this financial story. Their total debt comes in at $10.5 billion, and that sure is a lot of debt. However, look at this. Their total equity, it does make up for that. We got $15.82 billion. That gives us a debt to equity ratio of 66.4%. This is not a bad ratio, but one concern is that it has been increasing, as it was only 52.2% just 5 years ago. Taking on extra debt can be good, as Pembina does have a lot of projects and expansions that will benefit them long term. If we look at their cash and cash equivalents, not a lot there, $137 million. On their short term, they have assets of $2.63 billion, and their liabilities a little bit higher, $3.22 billion. Not super crazy about that, but it's not completely bad. On the long term, their assets come in at $29.99 billion, liabilities $13.58 billion, much better. Overall, this is not a terrible debt situation, and I suspect they will improve it big time as the fruits of their investments pay out, and lower interest rates will allow for more money to go back to paying off that debt. Even though it is a lot of debt, they have no concerns with paying it, as it is well covered by their operating cash flow, and the servicing of that debt is covered by their EBIT, that earnings before interest and taxes. I do believe we have seen enough to move to the final pages, where we're going to ask that one question: what is my final verdict? Pembina Pipelines is a solid blue chip stock with good moats and a strong potential to provide a steady flow of passive income with some reliable growth to sprinkle in there too. I do think they will thrive in a bull market, especially with rate cuts on the table. For the passive income investor, this is a solid, reliable dividend payer. They may not be the highest dividend, but they are a solid choice in the oil and gas sector for diversity and payout. For long and midterm investors, this is another great choice for the sector, and we should have some decent total returns going into a bull market. That is definitely something to look forward to. The question posed all the way back at the beginning is whether or not this should be a favorite once again, and I don't think we are there yet, but they sure do have the potential to get there soon. If you are interested in Pembina Pipelines, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on ENCC. Thank you for watching, and I will see you in the next video.